Who's with us? Former Goldman Sachs partner Peter Kiernan and Ashley Webster. Peter, big tech riding high. I mean, really riding high. Those three we just quoted. Are they too expensive for the little guy to get into and buy now?
Look, the trouble with timing entry is you almost never get it right. And so what I would say to people is, here you have an S&P that's hitting all-time highs. People say we're range-bound in the market. Sure, but we're range-bound at an all-time high. Also, interest rates are dead low. The Bank of England just cut its rate to the lowest in 322 years.
Wow.
That's a long time.
Well, I've got to do something for you British guys. I've got to stay with you. I've got to keep
we're
up.
Americans, okay?
No, all right.
So the question stands, are they too high for people to get into now? Those three stocks.
The thing to watch, there's not a lot of volatility. In fact, volatility, which is one measure of risk, is at a multi-year low. I think that says get in, certainly on any dips. There will be dips. Markets don't go straight to the sky. These are great stocks to own. They are the bellwether, the bell ringer, and the Exxons and the others have fallen back out of the pack.
I'm astonished by the progress of those stocks. In the last couple of years, that's where so much money has just flowed right in. It's amazing. I do want to ask you about Donald Trump's growth plan. It was laid out yesterday, not in detail, but we know the basics of it. Tax cuts, renegotiate trade deals, encourage domestic energy, get rid of some of the regulations. Do you approve of this?
I do, and I think he also hit very hard on the infrastructure card. And the thing that's different about his infrastructure approach than Hillary Clinton's, as he says, number one, we're going to engage business. Number two, we're going to cut regulations. Why is that important? The last time the Democrats weren't shovel ready. Trump is saying, we're going to get shovel ready. And finally, the most important in some ways is what you spend money on has to be a multiplier. It has to create additional jobs. Building a bridge, building a highway, that's a multiplier. Giving the TSA new uniforms, as they did in the last stimulus, not a multiplier. So what we have to look is who is economically shrewder. Clearly, it tilts towards Trump.
I think the basis of Trump's plan is cutting taxes for corporations, businesses, and for individuals. I think that's where you get the real growth from. Are you going to take me on that?
Well, I think taxes are important, especially when you essentially collapse a layer of taxation. When you take the sky-high tax rate for U.S. corporates, cut it to 15%, you're going to generate a lot of good profits, and profits don't go to the corporations, they go to the shareholders and the pensioners. That's good for everybody.
Okay, got it. You think he can get 4% growth with a plan like that?
I don't know if 4% is possible.
I was with him this morning, interviewed him this morning on the Fox News channel. He said, yeah, 4% growth or better. You think he's right?
I think he's going to get 4% if he invests heavily. He's got to be less timid. We need to spend at least $1 trillion on infrastructure. At least $1 trillion. Anything less is a tip.
Wow, $1 trillion. Pretty soon you're talking real money. $1 trillion. All right, Peter. Hillary Clinton.
Thank you.
I've got